Some of the biggest trades ever recorded have just gone through the market. And today we take a look at stocks, commodities, and cryptos to break down the key levels that you need to be watching. 2023 is massive. And as we know, it is big tech earnings. Yes, this is probably the most pivotal time for either a buy the rumor, sell the fact for bears, or a continuation to new all-time highs. So as the Fed readies another rate hike this week along with the ECB, what else should we be expecting? Well, we'll be deep diving into some of the big reversals on charts such as semiconductors and of course what's going on with the Qs. A pin bar or rejection candle is put in. But it doesn't just stop there because as we mentioned, earnings is kicking off, and have a look at some of these companies. We've got a lot to cover and some massive volumes. Well, welcome back everybody to the Daily Show where we talk about stocks, commodities, and cryptos. We're covering the latest macro, leading indicators, and of course the hottest charts coming your way today in what is a massive week. We're looking at volume soon, but let's just go over the 1 week performance. What it was a movement out of tech as we see a NASDAQ rebalance on July 24th. And a movement into defensives. We saw things such as healthcare, utilities, and of course staples all do incredibly well over the week. But that's not it. We actually saw some of the largest trades ever recorded in so many stocks. Let's jump through them right now. Nvidia, a massive cluster trade at the peaks coming into Friday. Google, another huge trade at those highs we've been reporting on. Amazon, massive. Microsoft, one of the biggest recorded. AVGO, it just gets bigger. And then we go to Adobe and Costco. So it wasn't just tech, but realistically, it was mostly in tech that we saw huge trades. AMD also joining the party as well with one of the biggest recorded trades ever. So does this mean that it's all to do with rebalancing, or was this large funds and secret Wall Street shenanigans going into what is no doubt an important rebalancing event, but also an important central bank event being the Fed's raising of hiking of rates and the biggest earnings season record this year in 2023? Well, it all seems to line up very, very well with what we've currently been seeing. This is about 2 days out of date now, which is seasonal trends in pre-election years. If it's going to fall, usually in the next 2 to 3 months, generally dictate that it should be around this time. And that's just the data speaking. And of course, it can be wrong, but it's something that we're starting to see process in some of the charts. We mentioned before that semiconductors were starting to do bad. We know that if we have a great 20% increase since 1971 in the NASDAQ, the third quarter is the only really weak quarter. Is it going to be again? Well, it makes sense again with the data, with the stats that we're starting to see. So we can paint a picture of maybe some bearishness in certain sectors within the market. And if that's in tech and it is a buy the rumor, sell the fact, of course, it's going to lead into some fairly significant potential mean reversions in the market, which we'll look at later if you're not aware of what that means. Let's go over to something I promised everybody, which is, of course, to check out gold. Did we see an increase in basically movements and flows into gold about a week and a half ago? The answer is quite simply, yes, we did. You can see over here there was a big increase in gold purchases, and we have to assume this is a big player coming through and getting a little bit excited about the shiny metal once again. It makes sense for the time of the year and everything else, and we'll go into that chart later on today. But let's also move over to what we expect in this earnings week. It's not just that it's a massive earnings week with huge amounts of percentages, but also look at the options expected moves. Snap and spot for the people that are daredevils out there, 10% plus expectation of move on the day. Meta also expected to be a brutal day for somebody, whether it's the bulls and the bears. And then, of course, we get Google, Microsoft, and many others hitting around those 6%. That's up on average compared to what they've usually done. Usually they're sitting around 3 or 4%. This time, 6% expected moves. And we know it's this week that matters. 48% of the equity cap of the S&P 500 basically reports this week. That's huge. That is the biggest week. And as we get past August the 7th, we've kind of done about 80% of the main stocks. So at that point, we have a very good idea of what the market thinks, and usually we're starting a trend. That's why you tend to see the end of July into August beginning some kind of trend. Whether that be bullish or bearish, we don't know yet. But even if they come in with great reports, we've seen that with Netflix and Tesla so far, the forward guidance is the one we're looking at. That's where the market goes, well, what's going on in the future? Markets trade 12 to 18 months in the future. They don't care about the here and now so much, so just remember that and keep it in the back of your mind. What about ERP? Well, of course, we've seen Morgan Stanley's Mike Wilson go on about this in 2023. I tend to agree it's a very good metric for a longer term investor. And as we saw a few weeks ago, it's really negative. So that means that at the moment, according to averages, it is better to theoretically be in cash than it is in the market. Now, of course, you could say, well, that's stupid. That is not the correct way right now. This is looking at a 12-month future target based on things that are going on right now. Interesting. Could be wrong. It was wrong in the 90s. So you've got to remember that it's just an interesting stat there. Another interesting stat is that JP Morgan, Goldman Sachs, BofA, all of these different research houses have started to put out a very big circulation report, which says that June CPI print is likely the last favorable year-on-year effect. Effectively, in most of their forward predictions, they're expecting an increase in CPI. If this is true, what will the market do to it? Is it another one of those kind of like negative events that could occur in the market to give an excuse for mean reversion? Certainly something that is coming up. Let's now jump into the wonderful world of options and have a look at how this Friday played out, and with some massive volumes coming in across the board. You can see that we had almost 2 times normal 90-day average volumes going through Tesla, Nvidia, Netflix, Microsoft. Everything was just massive on the session. There weren't huge moves necessarily across the board, but what it was big volumes. And as we scroll down, we got 57% calls and 43% puts with 42.6 million. But the big trades were really going through not in the options, but instead they were going through in the stocks themselves. So let's get into the stock market in just a few seconds. As we know, this week marks the biggest earnings of 2023, and what a great time to thank the sponsor of today's video, which is Tiger Brokers, before we get into some of the key charts. Now, they have a bunch of special offers down below, but let's jump into the platform and take a look at what you might want to use some of the features for this earnings season. Monthly, weekly, daily view. This helps us to get an idea of what's coming out this week ahead, and more importantly, you can customize it to your own watch lists, countries, or of course positions that are open. If you're not aware when the big earnings are coming, it can move upwards of 20% plus, and that can of course get you in some trouble. Also, a new feature, updated news feeds, live services, every minute updating, and of course you can do a whole bunch of customization to that. Whether you want to look at their community or, of course, jump into options flow, you can do all of these things and more inside of the platform. And you know what the best thing about all of this is? You can scan and have a look at whether it believes it's a sell or buy side, call or put. This is something that's a little bit unique, and I think it's awesome to see them adding this to the platform. So what are you waiting for? Check out the special offers down below. And of course, if you're from the Australian or New Zealand audience, there might be a little extra something for you guys. All right, let's go through the big indicators first for the stock market for the week ahead, and of course, cryptos and commodities. First up, US 2-year. I still think 5.1% is what we need to be watching, guys. If we get above that, it's going to mean an acceleration of yields moving forward. The BofA report and others might be coming out with maybe a little bit of sticky inflation, and that is going to be your signal. Now, bears will like that price. If the US 2-year starts to come down, potentially the bulls might like that very much. And of course, that could push us to new all-time highs. This is one of the most important charts that we need to be watching. And also, if you're a gold investor, you'll need to pay a lot of attention. A TD9 coming out from our favorite index, or like made up index, Magma, which is of course Microsoft, Apple, Google, Meta, Amazon. This is arguably, I guess, some of the most powerful stocks that have been pushing us up so far. Of course, you could add Netflix and you could add Tesla, but that just makes you go to all-time highs. Very similar thing, very similar reads. We're a bit extended, and we ended up putting in a shooting star style candle with a reversal style signal. Where does it go next? Well, theoretically, we should be able to move down to mean reversion. The problem is it could mean this, and then 20 moving average would come and catch it, or it could mean a blast off and a sell down. Which particular sectors have told us that markets are starting to weaken? Well, one of those was semiconductors, which we'll bring up later. The skew index didn't really show us much, though it did get crushed earlier last week, which of course is good for bears. We also saw that the RSP put in a TD9 as well, another exhaustion signal right at the highs. So there's a lot of things going in the favor of the bears this week, leading into, of course, earnings season. And this is what you usually find yourself at, a critical point ahead of big news. Central bankers, earnings season, everything else. Really interesting copper chart. I would mark 2 things here. Above the highs, 3.9. If that happens, we've probably just faked a lot of bears out. but at the moment looking weak. 2 rejection candles in the direction of this 2-hour trend here, and we're starting to say, well, maybe if we get new lows on copper, we're going to take out 3.7 and return back to 3.5. As most of you are aware, in the commodity space, copper shows us kind of an idea of economic health, and they call it often Dr. Copper. Well, at the moment, Dr. Copper's been weak for quite some time. We've reported on that most of this year, but it hasn't really made any impact other than metals and energy trades. Those have been the ones that have been weaker actually this year, thanks to this chart. It hasn't affected, of course, big tech or the economies as of yet. So we'll be wondering whether Dr. Copper starts to weaken this week. Let's move over to the VIX. Nothing much going on there. We haven't seen too much VIX volatility recently. 12.12 is still a gap that is left over from 2020. And as we know with VIX, I think all gaps have always filled. So 12.12, interesting point there in the future. Should we go to a new rally and a new all-time high? And we'll talk about that scenario soon. We also reported on huge volumes going through SQQQ, TQQQ, and a whole bunch of other leveraged funds last week. So far, I can guess, and I think a lot of you else in the comment section, I read those, you did guess that probably a big player entered in, and they'd be pretty happy with themselves right now because they basically bagged by the end of the week. They entered right on the low here, about 9.93% so far. There's a long runway for it if they hold position, but was that a turning point for the SQQQ? It's been one of the worst this year. It's just such a critical point here in markets into the biggest week, arguably for earnings anyway. The gap fills are egregious. I don't think I've seen so many gap fills that are open for the NASDAQ. It's like too many of them, yeah? So there's so many gaps, so much inefficiency on the way that the Qs ran up. The SPY is very similar, and central bank liquidity is very disconnected. We've talked about some of the secret central bank liquidity on the channel before, so subscribe if you're interested in that type of content. And I haven't got an update on that one, but I do promise you this week I'll get an update on what's happening with the secret liquidity in the background, because this tracks most of the main kind of concepts. Of course, the one they set up this year in March was a little bit more sneaky and it's harder to track. TLT, what's going on there? Not much. Huge trades going through these prices. No breakout of 104, which is, of course, for the US Treasuries, and we get nice lows through this period. So, again, pretty interesting point. The dollar, nice strength, exactly kind of what we expected last week. So congrats if you were in dollar longs. They did very, very well. And I suspect that the dollar may be able to continue its ramp into at least this drop base here, which is a drop base, drop, a lot of inefficiencies, a little bit more ideally in the dollar to move up, 101.12. And then we'll kind of, analyze it after that point. I expect to be doing a bit of chart work with everybody next week as we approach this kind of key level, because as I say here, interesting bull zone from before. We can delete that because of course we bounced off that already, but this will be a big key area, this 101.60 as well. We'll deal with that as it comes. What about gold? Gold rejected the highs. Now, before we mentioned that big funds went into gold. So let's have a look where they entered. Most of them entered in this candle here. We had a suspicion that there was large trade going on because GDX and everything else went through on the CPI numbers. But I wouldn't be surprised at all to see gold continuing to show a little bit of weakness down into these zones. We'll be updating on these alerts, and of course, we'll be paying a lot of attention to it. As we reported last week, we thought gold would continue its sell-off through the Friday session. It did, so that was actually not a bad trade, and the reason why is because we saw a small change of trend. Some defense should be held somewhere around where it is right now, and 1950. Underneath 1950, I believe we go back to 1930, and that's where we really will see whether gold is serious about doing a big turn in these markets. Semiconductors are looking pretty shocking. Island reversal came through daily, big kind of switch there on that one, and we can see that it's all happening at the highs. TD9 reversal on the weekly. These things aren't jokes. They're not, of course, guarantees. Nothing is. But if you are looking at this from a bear perspective, it's one of the better reads we've seen. We've obviously had island reversals before, such as this one here, that led to a couple of days of sell-off, and then it just snapped straight back. So island reversals are just part of a pattern that we kind of use, but look at the volumes. Notice these volumes are increased around this level. This is all into that rebalancing event and, of course, the big earnings season. Buy the rumor, sell the fact, we'll find out. Nvidia, is it down enough to be, really scared yet? Not really, 8.37%. It certainly dropped. It's seen on some massive trades, massive trades. But again, it doesn't necessarily mean the trend has changed. It hasn't. I mean, frankly, until we really take out this low here, 400, we haven't really changed trend to the downside at all. 2 hour has changed trend, but only, actually not even really. It's kind of still floating around. I think it's very hard to call an NVIDIA. It's a very strong stock, so you've got to see a lot of movement. Semiconductors, the index itself looks a lot better in terms of the weakness. Tesla, yes, this came out. Good earnings report on the surface. Obviously, the future and the tight margins and all sorts of things that were going on have some people a bit worried, and the market dumped it. Little wonder, this was a pretty big trade zone. It stopped just before 300. Remember, if you have a clean target that everyone else has, never go for that target. Always go a few dollars before. Look at the level 1 and level 2 data, and ideally you'll see huge trades going through a certain price. Once you see that certain price showing huge amounts of trades, that'll be a big player generally dumping a position. So remember to learn how to read that. We'll check it out in a video coming up soon as well, where we'll go through some big print data and have a look and see whether we can get advantage from those types of things. Let's have a look at the Tesla trade. At the moment, that was a pretty big rejection put through. Oftentimes, when Tesla does start to change sentiment, it gets a bit weaker. Where will the bulls be? Around 242, 240. And at the moment, this is a bit of a change of trend. So we have to kind of expect rallies to be met by sell demand as long as the rest of the market starts to show, I guess you would say, bad-ish earnings, maybe even record earnings, but at the same time, kind of weak forward guidance. That's what you're looking for this season. The strong sectors continue to be strong. We saw defensives really come through with the goods, and same with healthcare, our number one favorite sector last week. Yes, staples did really well. Utilities did really well. That is 3 days now, and I wanted to report it here. 3 days of incredibly good results coming out from things like utilities, from staples, and from healthcare. Now, in fact, utilities actually hit one of my targets I had in a while ago, 68.46. It's done a little earlier than I thought. So I'd like to see utilities still do better. I'd like to see defensives continue on their rotation. The same with healthcare here, new breakout high. I'd like to see that thing get back into these kind of 140s. And as these start to ramp up, what that means is that markets like big Wall Street markets are moving potentially defensive. We've seen 3 days of incredible strength out of all the sectors across the board. It's unusual. It almost has not happened since any of the rallies this year so far. So I think that's really important. I posted on our FX Evolution Twitter over here, the rotation event. So utilities, healthcare, and staples all putting in solid days on Friday, but more importantly, the best sectors, number one, number two, was I think staples or utilities and healthcare anyway over the last 5 days. And 3 day rotation was very strong. So someone in Wall Street is purchasing these. Now, are they doing it just due to normal rotation, or are they doing it because they're bunkering down into the worst 2-3 months of the year? We're starting to see weakness on, of course, the indices, the semiconductors, but ultimately earnings will be the decider. And do remember, if we snap these highs, that is, we take the highs out that we've just posted, and we'll look at that soon with the Qs, that is going to be another big squeeze. And you might think, well, it can't squeeze anymore. It's already squeezed enough. I still think it could squeeze higher. It's possible, but of course, that's going to be a technical signal. So for now, we have started to see weakness into this week's earnings. It's all going to be about earnings and central bank policies. Australian market, what's going on here? Absolutely nothing. You can see it's not the tale of one market. This is big tech being sold off. So the Australian market is still holding this short level, this supply. If it breaks out to here, that probably means copper has also broken to the upside, and we might be seeing a bit of a ramp in things such as metals, energy, etc. So pay attention to that. We saw the German DAX show us some weakness signs, then put in an okay Friday. I kind of thought this might weaken a little bit more, like we talked about. Still in the short zone, not a great close trade. So what I think is we need to break underneath this little white dotted line that I've popped down here to really show us that this thing's actually got momentum to the downside. Around 16,100 should be getting us a new low, and that should probably show us the bears are starting to get into control. At the moment, they're very, very tough through here. Right zone for the bears to get control of, but the daily was weird. It probably should have closed lower and ideally underneath 16,000, which we know is a big level for the DAX. US 2000 coming off that 2,000 point, stops just before, similar to what we saw with Tesla, stops just before the round number, sells off, actually where you expect resistance to be had. And if it does come down, maybe back to the most traded zone here at 1896. And if things get really bad, then of course 1750 would be the next level we'll be targeting. Two big zones we'll be watching, and at the moment it's at that resistance point. US 30, the Dow doesn't seem to care. It's just trading very strong. Maybe it's a move to defensives. I can say one thing though, that is not usually the type of candle that you would think is bearish, and it's a pretty strong looking candle into these highs. So the Dow's done nothing for a while. Maybe it's playing catch up. Maybe this is bunkering into defensives ahead of a sell-off through tech into earnings and, of course, the rebalance. But yeah, the Dow not looking so weak as comparison to the other markets. As we mentioned before, the Qs are looking pretty bad. When we go to the weekly, we get that shooting star. We get a TD9. We don't know that that's going to give us exhaustion, but of course, this is one of the most classic candles most people learn in the book, which is a shooting star or pin bar. Now, do they work? Actually, they're more of a coin flip style candle, so it's really important where they actually appear. You can see some of these look like they work incredibly well. It's a little bit of edge, but you want to see follow through this week coming. So that is a new low being formed by the Qs. And of course, if you end up getting a closure above this zone up here, it will squeeze, and it will squeeze pretty hard. Next up zone will be like 400 on the Qs, and I would say it would do it pretty quick. So for the bulls, all you want is new high. You get a new high, woo, it's going to be nasty, and especially if it closes up there. But for bears, you can look at this structure and say, well, maybe things are starting to weaken off. And realistically, they are. If we go to the futures market, you can see there has been changes of trend. 2 hour has changed trend to the downside. That means that we've got a new lower low, as you can see here. We rejected that level and we started to sell off. Rallies this week, 15,000, kind of 750, 780. That could be where the bears sit. But small changes of trend, not significant ones on these time frames. Let's move over to the S&P 500. It put in a pretty nice trade, actually, for bears to continue on this week coming forward. It's been incredibly strong in trend. We're obviously at the right point. What I want to do is look at the weekly here, just to get a bit of an idea of how that rejected on Friday. It is actually a pretty solid rejection for bears. They managed to get it back down to previous close levels. That's a pretty big deal. And then on top of that, look at the structure that was formed on the 2 hour. Now, what that showed us is that there was someone that allowed it to rally and they dumped super hard. Look at this. This is another shooting star coming up on the 2 hour towards the rejection. The trend is certainly up, but the 2 hour has changed again in some ways to the downtrend. That's exactly where we expected in our private community, 7-day free trial if you're interested, during the Friday for it to actually start to sell off. And it certainly did. It showed it up and then it came back with a nice rally and then sold straight into the close. So did we get a new low? No. Do we need a new low for that? Yes, you do. So it's a big zone, but it needs follow through. And I believe earnings will be the biggest thing here. Bears will need to watch what happens around 4,565-ish. And of course, bulls, all you really want is a new high close, and then you can keep squeezing everybody out, just like you've been doing for the last 4 or 5 months. Let's move over to, well, technically 9 months of the year, really. What else do we have going on here? And that is Bitcoin. Nothing on Bitcoin. I'm excited about this market moving forward, actually, as a bull, but I just want to wait for the right price and wait for the right breakout. So if you're a Bitcoin investor, I wouldn't be too scared. I do think it could drop off relatively significantly, but remember the halving event is coming up. We'll do a special on that moving forward. It's still a while away, and we're trapped within two zones. The big buy zone here and the big turn point here. If the market's managed to rally through this area, you have to think it's going to put pressure on the top end side. And if the market's close to a new low, of course, well, back to the most traded level around 28,000, see what happens there. Big zones here for crypto for the week ahead, and it all leads into some monstrous earnings and monstrous news. We have flash services PMI 945 New York coming through for the US. That's going to be a big one. Then we have central banks everywhere showing inflation and all sorts of things coming through. The Fed rate, the press conference, that, of course, with the statement 2 p.m. on Wednesday. You always know it's the press conference that's an annoying component. It's expected that 25 basis points are going through, but the FOMC press conference, 2:30 p.m. Make sure you watch that, or at least pay attention to this video later on next week as we analyze it. Then we've got advanced GDP numbers. That usually doesn't do much, but it is there. We've got Bank of Japan. We've got Eurozone, and then we get core PCE price index, which is often considered kind of an important figure for the Fed, coming through 8:30 July 28th. Woo, it's a big week, everyone. I'm super excited to see what goes on. Do remember to subscribe, smash that like button if you enjoyed today's video as well. It does help us out so much. You have a great weekend. And of course, check out the special offers down below if you want to support the channel. And of course, have a look at Tiger Brokers. Thanks so much, everybody. Bye for now. We'll see you next week.